Okay, hey everybody. Interesting Friday. So I thought I'd just start with me here rather than just look at charts, though we'll get to that in a sec. Just a few things that I really think are important to consider. And some of them are conflicting because guess what? That's why they call it trading. You know, there's a bid and an ask. Everything there's an argument, a counter argument to the counter argument. It goes on and on and on. But when it really gets right down to it, there's two things that are the most important. The most important one is the second part here, but the first part is what are your positions doing? I was going to say what's the market doing, and of course that's important, but more importantly, what are your stocks doing? Now, most of your stocks will be in sync with the market in one way or another, with varying degrees of synchronicity. So the market does matter, but when it really gets down to it is what are your individual stocks doing? That's the first thing. But then the second thing that's more important is are you protecting your risk? Are you dealing with? And I was spending a lot of time writing something this morning for another book. Are you spending time with fear of missing out? And that's different than the risk of missing out. Those are, if it's a risk of missing out, if you see an opportunity and you don't take it, and then you go, crap, I totally saw that. Yeah, well, then why didn't you take it? Okay, well, then you had some doubts, yeah, and that happens a lot. So there's a fear of missing out, there's a risk of missing out, but then there's also the fear of giving back profits, and there's the fear of taking losses. And what you don't want to do is you don't want to allow a trade that's working really well. I'm not talking about something that's up 2 or 3%, but you don't want to allow one of your trades that's working really well to then fall and go into a loss. Frankly, for me, and I don't think I'm the only one, that feels worse than just taking a loss. Because, and you think about it, this should make sense. If you get in a trade, like you buy a stock, okay, why would you buy it? Well, I think it's going up. You're trading your process, you look at it, it's like, yeah, it's a good setup. Maybe not the best setup, but it's pretty good. I think it's going to work. And you get in there, and then the stock goes against you. Okay, so you could say the market disagreed with you. You could be humble and say, you know what? I was wrong. That's trading. You take your lick and you keep on ticking. You just book your loss and you move on. It feels worse to see a position, a stock work the way you thought it would. You go like, yes, I'm in this trade and the stock's working really well. I'm right. The market agrees with me. And then the stock rolls over and you watch it fall and then it falls below your entry price, and then it falls into your stop level to where now you're stopped out for your maximum loss. You set that that parameter. How much are you going to lose? How much are you going to risk on this trade? To me, that always feels, well, I don't really do it much anymore. A little bit. We all do a little bit, not so much for a loss, but we give back some profits just because we're holding out for more. But that was always my downfall, emotional downfall, when I had a trade going and then it reversed and I wound up losing money on it. So I was right on the trade, but I still lost money. And so where were you wrong? You weren't wrong to buy the stock. Um, you weren't wrong to ultimately if to not hold on to it past your stop. But were you wrong to not take profits early? Were you wrong to as soon as the stock started showing weakness, were you wrong to not get out then? There's a lot of second guessing, and there's just a lot of different things that you can look at and think about that are gonna have an impression on you. And so that leads me to this. So Friday was pretty much a bloodbath, and I'll look at some charts there, but I'm not going to look at a whole bunch of them because everything just looks like dog crap, right? So, if you got a pooper scooper, dude, go for it. That's great. We got a service that picks up our dog crap off of our lawn um, twice a week. Um, I don't think they'd be good traders, though. So the point that I'm making is that if you are in this conundrum where you've got positions and then they start to falter, and I'm sure that if you had a position on Friday, it probably did roll over to some extent or another, unless you were holding an inverse ETF or Marriott. um, but the thing is, if that happens, now you're in this unpleasant situation where, okay, Dan always talks, and every good trader would say this. Dan always talks about how the trend lasts longer than you think it will, and you want to have some kind of staying power. You can't just sell everything at the first sight of trouble, stuff like that. And so that's kind of going through your mind when stocks start to roll over, when the market starts to roll over. And so at what point, and there's not really an answer to this question, at what point do you really take a look at it and say, you know what? I have closed things out early in the past. I have imagined trend changes that ultimately turned out to be just the stock pulling back to the 20-day moving average when it had typically been at the 8-day moving average. And then it continued on up, but I thought that was the end of the trend, so I got out. Or the stock had been trending around the 20, it broke down and it was on its way to the 50. And so you going like, okay, well, the trend's broken. I'm not going to wait for the 50 because it's still down 5% to where rather than where it is right now. And then so you sell, the stock bounces off the 50 and goes right back up to where it was right at the high. So there are all these different these different games that your mind's playing, these different dilemmas, these different questions that you're asking yourself, and it can kind of drive you nuts if you're not careful. And you can wind up doing things that really you shouldn't be doing. And the way around that is at the very minimum, the way around that is to make sure you have stops set so you've got an exit plan before it's even required. And I'll get into these in a bit, but I raised stops on some positions that were doing really well, and they got stopped out. Well, what was I doing? I was raising the stop to this point where I thought, okay, it's loose enough to where if the stock keeps going, we benefit from that. But it's also tight enough to where if we get stopped out there, it's still at a profit. And that's kind of the way, at least in my view, that's the way that a good trader trades. Now, some people, some great traders, they wouldn't really do it that way. They wouldn't really say, no, I'm just going to set a stop along the way, and then if I get stopped out, whatever. They would actually really be looking at the stock, looking at the chart, and trying to kind of time it a little bit more as far as like, well, I'm going to sell into strength. And we do that too. But my feeling is you want to give your trade enough time to work out to the fullest extent that it's going to work out. That type of thing. So anyway, all of these things that I'm mentioning kind of came into play on Friday. It was kind of an interesting day. One thing that I didn't have the news on, so maybe this was all over the news. But Meta announced a secondary offering, and because that's important, because Mark Zuckerberg's made a bunch of stupid ass decisions on AI stuff, and so of course you're going to need to do a secondary offering so he can continue that. Maybe at some point he's going to change the name to AI as opposed to Meta, which was his big deal about having everybody wear these stupid welding goggles because the reality that they could get artificially with that goofy picture of him in there was better than the reality that we're in now. Some would say that's true. Anyway, so there was just a lot of these little heavy things that impacted the market. So I want to just get right into that. But I just sometimes I just kind of like to look at you in the eyes, or at least let you look at me in the eyes. Number one, to make sure I'm not bloodshot, that I haven't been drinking. But then the other is, I'm joking, but yeah, I am. Anyway, but the others, just because I don't like just looking at charts all the time. There's so much more to trading than just looking at charts. So let's get into it. I got to put on my glasses because I'm basically blind these days. Okay, so the S&P went down 3%. When the S&P goes down 3% in a day, that's like bears growling on magazines at the checkout counter in the supermarket. Like that's a big, big dump. And you can see it here. And it was just about on double average volume. So I'm looking at this as I'm looking at it as a trend break. Now, how far is it going to go? I'll tell you this, man. Whenever we see this type of thing, the panic can set in and you think, here we go. We're good. Here we go. And that typically isn't what happens. I think there's any number of reasons for this. I think that one of the biggest ones, and I mean, I noticed this yesterday morning, that hot jobs number that just gave us like, wow, the economy's really cranking. And then at the same time, we've got an inflation number that shows that we're going up. That's like good news turns into bad news because the market, I think the market's always right, but sometimes it's slow. The market had been still with varying degrees of intensity looking for a looking for a drop in interest rates. Actually, because hey, that's what Trump wants and this and that. Everybody freaking hates Trump in Washington. That's what I think anyway. I don't know that for sure because I would never go to Washington. I saw Star Wars, and Washington looks a lot like the Death Star. So I wouldn't go there. But as I understand it, there's a lot of people voting against him and rooting against him. And so you're not going to see a little bit of that's editorializing, by the way, but not all. But you're not going to see the Fed really, really eager to drop interest rates when we've got oil the way it is. And then a hot jobs market for whatever that's worth. And I think AI is replacing a lot of jobs, and it's not replacing the menial tasks. It's replacing like middle management type. So that is ultimately going to one day have an impact on the economy, on the jobs picture. But for right now, hey man, everything looks so good. We got to wear shades. But so interest rates, here's the 10-year, 4.53, moving up. It's been doing that for a while, and that's not good. That's not good for stocks. And so that's an issue. Also, I think that it could be that the market is starting to look at the Iran situation, and instead of thinking, well, it's gonna resolve, they'll get that figured out. I think the market's starting to realize that, you know what, maybe it's not going to get figured out, because like I don't want to, I don't want to be critical of all the IRGC heathens over there, but they don't really give a crap about the Iranian people. We know this. Their battle plan right now is literally to survive. That's it. They consider survival as winning. And listen to me, this shouldn't be new to you if you're paying any attention at all. But they've also shown that they don't care about the Iranian people. They killed 35,000 protesters several months ago, whenever it was. So we've got a regime. We've got Iran, the government, the people in charge, whatever, they view just survival as winning. And with what's happening in Washington, where we hear like, oh, they really, really want to make a deal. Yeah, sure. You keep saying that, and maybe one of these days it'll come true, right after flaming pigs playing violins fly out of my ear. So we've got that little conundrum here. And then all the while, we're getting closer to an election, which is likely to be pretty sporty. And so the Iranians are looking at that. They're saying, if we could just hang on to where they get close to the election, then we'll definitely be able to hold on through. Hopefully, the politics will change in Washington, and then we can get back to our merry ways again. So I think that the market is starting to look at that and say, you know what, maybe this isn't going to be resolved anytime soon. And so that would make oil a real issue. And there's counter arguments to this and that and the other thing. There are always counter arguments. But I think just in general, that's the kind of concern. That's the kind of concern that the market, that big, massive mosh pit of traders, is starting to see. They're kind of looking at things a little bit differently now. And I think that for the longest time, we've seen the semis go up just dramatically, for crying out loud, up over 50% in less than 2 months. That's kind of nuts. We've seen such dramatic moves that I think the collective market for quite a while has had their fingers right on the trigger saying, when do we sell? I'm listening to Dan. I got to hold on. It's going to go higher. Don't want to liquidate. Going to go higher, going to go higher. And then finally on Friday, it's like, oh crap, we got to get out of here. So everybody's doing that at the same time. And that's kind of where we are right now. And I mean to tell you, this is not the kind of thing that'll just repair overnight. So if you're bullish going into Monday, like, oh, I'm going to buy the bounce, you're probably going to get a little bounce, but I don't think it's going to amount to much because just think about all the unhappy campers who bought up here and now they're underwater. And so if this does start to run up, how high up is it going to go before these sellers come in and say, good Lord, I can get my money back or most of it. And then we wind up having more of a retracement. And I'm just drawing this on the semis. You could draw it on any of these charts. You could draw it on the Qs. This is a nasty thing. The NASDAQ down, the NDX down almost 5%. The Qs, which is just the ETF, heavily traded, only 100 million shares, down over 5%. So this is just a massive, massive damage day in the market. It's really kind of a trend break day. And so I will just tell you this. I think really your time frame is maybe less relevant, other than just for taxes and stuff. I can't advise you on that. But your time frame is really less relevant than you might think. And the reason is because I think the path, at least for the time being, the path of least resistance is down. Am I bearish on the market? No, I'm observant. I want to see what's happening, and that's what I would suggest to you. Just wait to see what's happening. Don't anticipate. React, and make sure you're reacting in a well-reasoned way. That's the thing that's really, really important, is to not just react, but do it in a healthy, money-making way and a money-preserving way. I know an old buddy of mine, Eric Fors in Minnesota. I was going to say something, but I'm not going to. Anyway, Eric's a bond guy, and I don't think this is an Ericism here, but he said, people ask me all the time, like his clients, how do I make sure I'm wealthy? How do I make more money? And he said, it's really easy. Don't lose it. Just don't lose your dough. Let the market take care of everything else. And that's really relevant right now. I don't want you in a position where you're losing your money, where you're losing the profits that you've been making during this during this wonderful move, at least this. So in my view, I don't, there's not one single thing that I have on my mind that I'd like to buy on Monday. Maybe buy some time. That's it. So that's kind of my that's kind of my admonition. My suggestion to you is, and I'll do a webinar. We'll do a training session on Monday and look at this. Typically, I was kind of maybe thinking because I'm doing a longer weekend thing like this, that maybe Mondays, maybe it's better Tuesday or Wednesday, but I think for the time being, I'm going to leave it at Monday because Monday is a super important day. So I will be talking more about this on Monday when we see how things are going to unfold. I have no idea. Oh, I think the market's going to be down. Oh, I think the market's going to be up. Which one's right? Both, neither, I don't know. So let me get right into it. Just as a general rule, steep and deep, which is what this is not going to give you a sharp rebound. Not if it's deep, like a little sell-off like this. I mean, this is kind of steep, not like this, but it's not really that deep. The trend has held here, so you're going to get this kind of move. But when this thing is steep and deep, big move down, it leaves a lot of bodies behind it, and they're going to be tough to climb over. So that's just my general feeling about the whole market. We'll look at some stocks here. Meta, again, secondary offering. This thing has been brutal for a while. And I think it's safe to say that if you're really, I can't remember the last time I looked at Meta. If you're really fixated on Meta because, oh, it's Meta, it's one of the Fab Seven or whatever the heck it is now, I just think you're missing a great party elsewhere. This is just kind of dead money. NVIDIA, maybe this is going to bounce off the 50. It probably will. But do I think it's going to go up there? It probably won't, but it might. But for me to be looking at this with all confidence on Friday and saying, oh, I got to load the boat here because it's going to rebound off the 50. Well, maybe it's not going to do that. Maybe it's going to fall another 5, 6, 7% and rebound off the 200. So this is the type of deal where if you're making these kinds of trades or making these assumptions, what you're really doing is letting your opinion impact your trading action when you really actually don't get a vote. You don't get to dictate whether this rebounds off the 50 or not. You just don't. So you wait and see. And even then, just like on the SMH or whatever we were looking at here, when you get this kind of steep sell-off, there's always institutions that'll buy NVIDIA. Love the company. Love Jensen. Love his black jackets. But how much are you going to get like, oh, this is a big washout. This is a big washout. Now institutions are going to come and push that up to new highs. Not. It's not going to happen. Is this the all-time high? Yeah. But is it the future all-time high? No, this is ultimately going to go higher. But hell, I'm just trying to figure out what to do on Monday. Next month, next year, I don't know, but I can tell you this. Next month or next year, you can take this to the bank, as they say. NVIDIA will not be a market leader. It won't. Maybe Marvell will, the next trillion-dollar company. Well, that came down almost 14%. Okay. Wasn't this good? Okay, this is a great trade, guys. Thank you, Mr. Market. We got in right at the right time, just as this was breaking out, 220, even before 220, we're in at 218. A couple days later, the stock gaps up and pre-market, it's like, okay, let's get out at 320. So this was a 47% gain. And if we'd held it at one point on Friday, our 47% gain would have been down to a 15% gain. That's the kind of pain that I was talking about earlier. So when you see something like this, you really just have to say, cool, I'll take it. This was going to be a long-term hold, right? Maybe it was long-term hold, but think about it. Why are you holding for the long haul? Why are you holding a stock for the long term? Only one reason, unless you just fell asleep. The only reason is because you know that the stock's moving up. You're holding it for a bigger move. You're holding it to make better gains, and it takes time for stocks to climb up. So yeah, I'm going to hold this. I think I'm going to get a double out of it if I just hang on to it for a year. Okay, well, for crying out loud, 3 days later, you got a 50% thing. Take that thing off the table and save a year, and then find something else, or just go back to this after it's settled out a little bit. But these are the types of trades that we want to be making. I guess I could pat myself on the back, but I'm not going to do that. I want to pat the ticker on the back because we thank Marvell for that. It was marvelous. Now you don't want to be long this stock. There's a lot more selling to be had. I don't think you're going to see this kind of move higher. So away from some of the stuff we've been looking at, Tesla, this is a busted stock. If you're looking at Tesla, and I know some people always say like, "Hey, what do you think about Tesla?" This is what I'll tell you. Great Model X. My wife's pissed at Elon because they're not going to be making them anymore. Um, but with respect to the stock, this is what this stock is good for: day trading. This stock on volatile days, this stock can be kicking out money during the first hour of trading, during the first 15 minutes of trading. It can do that. But as far as buying this, I don't know why. I don't know why you'd want to do that. Amazon, this is busted. I mean, this was a crappy pattern anyway, but this is broken. If you happen to still be in here and did not set your stop where I had suggested, and you're still holding this stock, well, now you need to say, okay, I held a good profit open, and now I'm taking a loss. Take it, guys. Just and then go forth and sin no more. Okay, so with the semis, already showed you that. Now look at this. Like Intel was a big high flyer. It's running up here, and now the stock's rolled over. And one thing, I used to teach this a long time ago. I remember having a slide that said, "How come nobody wants my stock?" And what it pertained to was, you see this stock going up, and there's buyers all the way up, and there's buyers all the way up, and you're going like, "Wow, there's a lot of demand for this stock. There's a lot of buyers here." And then you buy the stock, and then it starts falling, and you're looking back here and say like, "Yeah, I got a lot of buyers. This isn't going to fall very far. I'm okay because there's a lot of buyers over here." And so as the stock falls lower, you start saying like, "Well, where the heck are all these buyers?" And then they're not around. And so you can really get down on yourself, or you can get pissed off and say the market's rigged. And it's not rigged. What you're witnessing and what you're participating in is this: once somebody is bought, they're a seller. The only question is when and where. And so you want to be looking at these stocks that are steep moves, and this was sure one of them. The tell that this move is over was not here. It's here. When it rallies back up, does not make this high, and then it falls back down and does not bounce off of this last low. This is a lower high, lower low. I think this stuff here is going to be a distant memory. That's just the way I see Intel working. And then Broadcom, what could I tell you? Big move higher the next day. We're in, and then we'd had it down here, raised the stop, and then boom, we're out for a nice profit. And I forget what the settings were on the active trade list, and for all I know, it wasn't even on there. But I know I was talking about a lot of people were in this stock. But it's a good thing that you're selling up here, because right now this thing's down 22% from the high. And look at the volume here. Like, a lot of people bought here. Now they're down 22%. You don't want to be those guys. All right. Now we'll look at some other stuff. DRAM, that's the random access memory, right? SanDisk, Western Digital, Micron, and Seagate. DRAM holds those as well as the Japanese SK Hynix, I think it is. I think it's Japanese. It might be Korean. I don't know. I don't speak either language. And then also Samsung. So this is kind of a broad swath of these stocks in this space. This is down 15, almost 16%. But from the high, which was just on Wednesday, it's down over 20%. This is a key trend break. And if you look at these stocks like Micron, key trend break. January 28th on Fox Business, 9:45 by the year end. Okay, well, we got that before the end of May. But I wouldn't be touching this right now. We'll see. Maybe it'll hold up here. I'd keep an eye on it because these stocks, these companies, there's a lot of stuff to go. Still, business is still rocking, though I will tell you that Andy Kwong, one of my good buddies, and he does options over at Option Market Mentor, and I'll be making more announcements about that at another venue. Andy, we just talked today for quite a while about memory and energy and all that stuff. And there are definitely some big issues here. But right now, AI and all things AI related are still using what he calls brute force, meaning collect everything and you got to get it all and then distill it and spit it out. And here's what it is. It's literally like brute force. And it just sucks up a lot of energy. At some point, and I don't even know who they is, but they're not me. At some point, they're going to find ways to not have to use such brute force to get all this stuff to work. But the way it is now, in fact, even better. But for now, got to have memory, got to have storage, got to have energy. And there's never enough, it seems like. So there's always going to be, for the foreseeable future, a big demand for this stuff. Always. And I do think I mentioned this back in January, actually talking about re-rating. The market used to rate these stocks as cyclical stocks. When the economy's good, they do really well. When the economy cools off, then they don't do really well. So it's a cyclical thing. Like even, I'm looking at my PC. I've got a bunch of memory in there. Okay, well, if the economy's crappy, I'm going to go like, you know what? That computer looks pretty good. I should probably dust it off, but I think it's fine. But when the economy's really good, I might be that same guy that goes, you know what? I kind of want a new computer. That's just the way the consumer is. And so for the time being, though, you got to be careful of these. At some point, the trend is going to end. Now, you will say, what trend are you talking about, Dan? And I'll say, well, let's take a look. The trend along the 20, still intact. The trend along the 8, maybe even still intact. It looks like, oh, this is a shakeout. Now we go up here. Oh, maybe this is a shakeout too. We don't know. Right now, no. The 8-day moving average trend, exponential, that trend is broken. But again, it might be unbreakable next week. But the 20 is holding. The trend along the 50 is holding. The trend along the 200 is holding. The 30-minute trend, not so much. So we have to just decide on any given stock, on any given trade, like what's the trend? Like what are we talking about? We're trend traders. If you're not a trend trader, you're underperforming. I will tell you this. Trading trends beats the hell out of being right about buying bottoms all the time. Because when you buy bottoms, there's a reason why bottoms smell. Because there's nothing going on down there that's any good. And so you want to be in trending stocks. So here, the trend is good, right? Pick your trend. SanDisk. Okay, and by the way, this one, if you're long this, you need to not be long. SanDisk. All right, so we're in it, the latest one here at 1528. Well, I just set the stop at 1590. So this is the idea where we let this thing run as long as it could, raise the stop, and so we've locked in a what a $62 profit, which isn't bad, except you did pay $1,528 for it. But a win is better than a loss. And so Western Digital should be out on that too. Took a nice profit here as well. If you sold some up here, that's awesome. But again, I was just saying, let's keep raising the stops and let these things run as far as they're going to run. But so far, by the way, the 20-day trend is still intact. I mean, it's really important that you keep your composure a little bit, and it's really easy to, when you see something like this, like let's say maybe you're long a big slug of this stuff and you really took it badly. Um, you can look at this and say, the market's going to zero. I want no part of it. And by the way, I've done that in years gone by. I have kind of panicked right at the bottom. Happily, I don't do that anymore. Now I kind of, if I see a real nasty one, I'm going like, can I put more money in the market? But the point that I want to make here is you can look at this and say, well, this is just going to keep going lower and lower. I got to get out of here. And then what you miss is that you actually get a nice rebound off the 20. And then the next day, it's up again. And the next day, it's up again. I mean, think about this, guys. Look at this. We've seen this. We've seen this pattern before. This is not unusual. This is not something that, like I always say, if you're looking at a chart and you're looking at a trade, what you want to be doing is looking at the chart and going, have I seen this before? Have I seen this before? And by the way, if you haven't, then you definitely do not want to be trading that stock. Definitely. If you can't look at a stock or if you can't look at a chart and say, yeah, I've seen this before, it doesn't always work out, but I've seen it work out a lot. Okay, that's your bogey right there. But if you're looking at a chart and you're realizing, because you got to think about what you're thinking about. If you're looking at a chart and you're saying, well, this time is different. And what needs to happen in order for you to make money is for the stock to do something that you haven't really seen it do before. In other words, this time is different. Now you've got kind of a different problem on your hands. You're engaging in wishful thinking. But as I see this right here, I could see this doing that. I could also see it doing this. And then maybe finally rebounding off the 50. So there's a few different scenarios here on this. We just don't know how this is going to play out. And so my point for going into this detail is to say this. On Monday, don't be bullish. Don't be bearish. Be agnostic. Be observant. You don't have to rush in at 9:31 and start putting money to work. Market's always going to be there. So anyway, I hope that helps. And let's see. Same thing with Seagate. I think I've already talked about SanDisk. Yeah. So all of these are really, they're. I would, if you're long. I had some SanDisk and some Western Digital, and I sold it yesterday because I just didn't want to fart around with it. I didn't want to stick around and see if this was going to bounce. I didn't want to be that guy that's kind of sitting there in quiet desperation, hoping that the market pulls him out of a bad decision that he made. We don't want to be those guys. Okay. So we can look at NASA, the space innovators. Remember, the SpaceX is coming up. I want to say it's the 12th, but I don't know. I'm not really tracking it much. I'm not eager. When is it coming? You'll hear about it. But all I know is these ETFs, all the lunar stocks, all the space stocks are just absolutely gassed. They're absolutely taking it in the shorts, buy the shorts. I wouldn't be I wouldn't be selling. I mean, I wouldn't be shorting any of these stocks, but I sure as heck wouldn't buy them. We could just bang through some of these. These are all just kind of my space stocks. Um, yeah, I don't see anything here that makes me go, wow, this is for me. Like, look at this. This is a nasty thing here. So all of these, like, hey, let me get in here at warp speed. Yeah, you're going to lose your money at warp speed. Um, when you see an entire, uh, I'll say sector really looking bad, don't look at iridium here and say, oh, well, this is the least worst of the bad stuff. So far, I would say that this is like the best. This is the best. This is the best looking person in a huge crowd of ugly people, but it's still pretty ugly. All right. So we can like Mars, no thank you, no thank you, no thank you, no thank you, no thank you. I could just like, no thank you. Like all of these are big no thank yous here. This one is a hell to the no here. Okay. So the point is, if you're looking at these, seriously, listen to me. If you're looking at these and saying, like, hey, um, I want to be long these stocks because of SpaceX, because I know there'll be a big hype around there. Okay, there may very well be, but the way I'm looking at things now, and I've been saying like, hey, we want to be into these stocks because there's going to be anticipation, and there has been. There's been really good anticipation. I mean, it doesn't get a whole lot better than that. So this has been a heck of a nice ride up to here, but at some point, you have to look at it and say, all right, well, the market's not that stupid and that predictable to where everything's going to accelerate right up until SpaceX goes IPO-ish and then still continues higher than that. The market's not that giving, we'll put it this way. So I think right now you can look at all this stuff, but think about this too. If you're looking at these things and you're kind of considering buying, seriously, this is a serious question. Are you trying to be right or are you trying to make money? Are you looking at stuff like this and saying, this is the best opportunity for me to make money right here? It's the best opportunity. If you are, God help you. You're probably missing some other ones. So we'll just kind of leave this stuff alone, okay? I'll watch it for you. You don't have to watch it. I'll let you know. Don't hold your breath. Okay, so the stuff that's still on our active trade list, Vertiv, this is a key breakdown below the 50. Will it rebound? I have no idea. Probably a little bit. Volume, just a little bit, barely higher than average, but momentum really, really stinks. It's all downside momentum. You should be out of this stock. If you're in it, then you're what you're doing is you're saying like, I think it's going to bounce and I'm going to hold for the bounce. And I hope it does, but it might not. Excuse me, air, got to be out of that too. Iron, let's say I run. No, need to be out of this too. Okay. Stop was at 63.90. Entry was here. So if you kept the tighter stop, you lost $1. Sorry. And then Navan or Navin, Navage, whatever it is, pretty good entry here, right around there. Pretty good entry here. At one point, it's up 14% or so. Raise the stop. And so we lock in a 7% profit on a pretty quick trade. I'll take it. It's not one that I'm going to remember, but it's a trade. It helps. And then Sterling got stopped out for a loss. Pretty quick stop, too. Buy here at 149 or 949.50-ish or something like that, whatever it is. So you're in at like 8%, maybe a 9% loss even, which I think frankly, you're going to sometimes take losses like 8, maybe 9, hopefully not very much at all, 8 or 9%. But I really think that the way you want to be trading is to strive to keep your losses at, say, 3%, maybe 4, and that can be hard to do. But if you're timing things right, if you've got good entries, then it's totally doable. I do it. We do it on the active trade list. We just get I'll set protective stops that tight because I would rather miss a good trade than make a huge loss. Okay, so anyway, that's all I got for you guys this weekend. Just a little note. I'm going to be starting this week having some participation in options. I'm going to be doing my blue collar options strategy and start putting things on the board there. So if you're an OMMer, you can watch for that. I don't have a specific number of trades. If I see something, I'll give it to you. In this kind of market, I'll tell you exactly what it's not going to be. It's not going to be by calls on this. No, no. It'll be, hey, let's do a covered call on this, or oh, I know this thing's gone down a lot, but hey, man, if I could buy it at a 8% discount, I will. So then we sell puts down 8% below where the stock is, stuff like that. So I'm going to be working on that, and I'm pretty excited about it. I finally have things teed up as far as workflow and things like that to where I can start. I'm not just running around with my hair on fire all the time, listening to my beautiful wife always say, it just seems like your business is in crisis all the time. I can tell you now it's not in crisis all the time. I'm kind of right where I want to be in this thing. So anyway, I hope I didn't drone on too long for you here. Sometimes I really just feel like at times like this, I do feel like it's my job to just kind of talk to you and hopefully help you stay on the right track. As most of you guys are people, ladies, gentlemen, decline to mention. As most of you know, I've been doing this for now over 30 years. So I've seen a lot of stuff. I've made massive numbers of mistakes. I've probably invented mistakes that nobody else would even think of to make. And so I've got a lot of, let's say I've paid a lot of tuition in the market, huge tuition. And I do view one of my biggest callings here as being able to convey that to you so you don't have to learn the same things. Trust me, you're going to do your own stupid crap. You will. Sorry, but you will. You're going to make some big mistakes and you're going to be kind of kicking yourself. And you may even be like going like, God, I'm such an idiot. What did I do? What did I do? And all that. Just watch the self-talk. All you're doing is you're just paying tuition. You're going to school. You're going to the school of trading and you're going to be paying tuition. Let's just make sure that you're not paying Ivy League tuition for a community college education. Okay. I just made that up. So anyway, that's all I got for you. I will see you all Monday.